Realty income has been sliding down in stock price lately, and recent events only have accelerated this trend. Currently, it is sitting around $55, and many investors start buying heavily when it hits $50, a level we haven't seen in a while, but it's getting closer and closer. With the stock price dropping, the dividend yield has gone up to an attractive 5.8%, making this stock even more appealing to income investors. And I believe Realty Income is approaching a prime buying range. So let's dive into the latest earnings report, do a fundamental analysis, and look at the price target to see if the stock is ready for a buy. On the 4th of November, Realty Income presented earnings, where they beat on revenue but missed on FFO. Diving into the earnings presentation, we see that revenue was reported at 1.3 billion, up 28% year over year. Really impressive if you ask me. Net income was reported at 261 million, up only 12% year over year, meaning margins are decreasing. And now things get really interesting. Two of the most important numbers, the FFO and AFFO, are both up as a total number year over year. However, looking at the per share number, we see that FFO is down year over year and AFFO is up only a little bit. So definitely keep your eye on these numbers. Looking at the dividend, we see that this has increased a little bit recently. And more importantly, the dividends are looking really good at a 75% AFFO payout ratio, which is the average for REITs. For the full year results, we see that it is expected that net income per share will be a little lower versus the prior guidance numbers. And it's the same with the FFO and AFFO. Another really important number is the net debt to EBITDA. This was reported at 5.4 times, which is a healthy range in my opinion, because I prefer a range of 5 to 6.5 times here. And Realty Income is really proud of their dividend, as they should. It really earns the nickname the monthly dividend company, especially because of the compound annual return of 14% since 1994. Another great thing in my opinion is the A credit ratings they have. This comforts me a lot. Looking at the property diversification, we see that retail is by far the biggest segment here, with nearly 80%. Industrial is at 14.6%, also looking pretty interesting for the future. The top industries are grocery stores and convenience stores, with a total of roughly 20%. To me, this looks pretty good since the individual industries are kinda capped at 10% each. Dollar General is the biggest tenant, together with some other big names. The diversification is looking really good to me. And it's a good thing to keep your eye on these tenants. Realty Income says that they have a process which minimizes the risk of tenants that go bankrupt. But you want to pay close attention to these tenants. Realty Income keeps on focusing their steady AFFO growth. It is sitting around 5%, which is not too bad, especially if they are capable of growing their portfolio at a high rate. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Realty Income is a 47.8 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting at 13.6, indicating they might be undervalued. Later in this video I will show you my 3 price targets for Realty Income stock, so make sure to watch until the end. Because price to FFO is only telling a small part of the full story here. Revenue is at 5 billion and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. In the past couple of years, revenue really skyrocketed, also due to some acquisitions. We see that margins are going down over a longer period of time, and this is of course something that worries me a lot, especially since 2020 the margins look not that great. In the recent earnings, we also saw that margins are decreasing. EPS is showing similar trends as the margin and the revenue, and for a REIT it looks pretty decent. Analysis expect that from here the EPS increases to almost $2 in 2028, and growth is really slowing down over the years. For the revenue, it is also looking very interesting, with an estimated revenue of 6 billion in 2027, and growth numbers are going down each year. Return on assets is sitting at 1.3%, which is a low number for a REIT. Return on equity is also looking really low, and the most important number, return on invested capital, is sitting at 1.6%, which is a low number, even for a REIT. It is also lower than the 5-year average, so that doesn't look good either. Current ratio is at 1.4%, which is a decent number for a REIT. Nothing special to mention here. Historically, it looks pretty good to me. And right now, Realty Income has 26 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Realty Income has 400 million in total cash, so they can't pay down a big chunk of the total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. It is actually not looking too bad for a REIT either. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.8%, which is an insane number. And keep in mind that Realty Income pays a monthly dividend instead of a quarterly dividend. Annual payout is at $3.17, and payout ratio is around 75%, which is the average for REITs. The 5-year growth rate is at 3.5%, which is a decent number. On top of that, they have increased the dividends for 26 years in a row, which is really nice. In here, we see the dividends paid since 2014. And to me, this looks really good. Realty Income really likes to increase the dividends at a low rate, but over a longer period of time this really adds up. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to grow at the historical rate from here. The increase in 2021 was supplemental. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Realty Income stock with the overall market, in this case the S&P 500. Next to that I added SPG and ADC. On the 5-year chart we see that Realty Income returned -2%, and this is including dividends. The S&P 500 returned 106%, massively outperforming Realty Income. SPG did best with 66%, and ADC is sitting at 33%. And both ADC and SPG found some momentum lately. On the 1-year chart it looks pretty interesting as well, with the S&P 500 again beating Realty Income very easily. However, SPG managed to beat the S&P 500, and ADC was pretty close in beating the S&P 500 as well. On the 6-point chart, it is again really interesting, with Realty Income still having the lowest return. And this time both EDC and SPG beat the S&P 500 quite easily. And the main reason for that was the whole REIT bull run in this period. On the 1-month chart it is again Realty Income with the lowest return. So bottom line, the S&P 500 was by far the better investment in the past 5 years. And also in the short term, it looked like the other stocks and the S&P 500 were the better choice here. But could this be the perfect time to buy Realty Income stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth, I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm filling in 15, 17 and 19%. And for the free cash flow margin, I'm putting in 66, 68 and 70%. For the PE ratio, I'm putting in 20, since it is a REIT. And for the price to free cash flow, I'm putting in 12, 14 and 16. While desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Realty Income stock is around $55. I hit analyze, and we see two green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $50, we have a mid price target of $65, and we have a high price target of $84. And to me, the mid to high price target is the most justified here, indicating that this stock is still looking undervalued. We also see why most people still keep waiting for the $50 mark for Realty Income, since that is the lowest price target in most cases, and also in mine. Please let me know the price target that you think is the most justified in the comments down below. My final conclusion on Realty Income is that it is looking really good in terms of valuation. The company is increasing revenue at a high rate, and AFFO is still growing at a decent rate. However, the margins are a bit concerning to me. The juicy 5.5% dividend yield that pays you a decent amount of money every month is really attractive for income investors. But let's not ignore the total 5-year return including this juicy dividend. You will be sitting at a negative number. And as of right now, Realty Income is one of the bigger REITs in my portfolio. And I'm still in the green, because I'm buying the dip in most cases. Because of the recent earnings and the current stock price, I do think Realty Income is a buy. And that is exactly what I will be doing in the coming weeks. Buy more Realty Income stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.